It's recording. Yep, it's recording. Good morning, everybody who is just filtering in. Give us a couple of minutes. We're going to let everyone jump in, and we'll start in a minute or so.
All right.
All right. So I think we have a handful of people on, so we may as well get started. Welcome, everybody. It is, I don't even know what day it is. It's Wednesday. It's Wednesday the 30th. It's 11 o'clock, and it is the SCORE PPP loan forgiveness webinar with Chris Carlsson. My name's Claire. I'm going to be your moderator today and help Chris navigate some of the questions. Just as a quick maintenance comment, please, we welcome questions. We want your questions, but if you could put them in the Q&A function and not in the chat function, that would be great. It's much easier for us to manage them that way. About a little bit about SCORE quickly. Most of you know, but SCORE is a non-profit entity. We are funded by the SBA, and we are geared towards helping small businesses. We are the Monmouth County chapter here, but SCORE is a national entity, and there are chapters all around the country. Mentoring is free, and it's available to any small business. So if anybody needs a mentor or is looking for help, feel free to reach out. This webinar is going to be being recorded. It's going to be on our YouTube channel at a later date, and we will send out the presentation as well to anybody who registered. So without further ado, I'm going to hand over to Chris and let him take it from here.
Okay, thanks, Claire. And I think we have a little bit more than a handful. I think we have about 30 people on board now. And this is probably not going to be as structured as previous have been. And I wanted to go back and remind everybody of the basics of the PPP forgiveness. I've now been involved in, I think, 3 applications for the forgiveness. And so I have a little bit of experience on looking at what the banks are putting out there, the ones that are up and running, that is, and there aren't many up and running yet. So I'm going to get a little bit of a briefing of what it may look like. All 3 have looked basically the same as to how they're doing it. And I wanted to, and I've also heard from several people in the process here, different questions. And I wanted to remind people how it works and some of the pitfalls that I've seen. So the first thing in the ones that I've seen, and it doesn't surprise. So what the first thing the lenders did was to put up basically a digital copy of the instructions for the EC form, the EC form for PPP forgiveness. And it told you to click on one of the boxes and certify that you have fulfilled this obligation to be able to do the EC form application. And you do want to do the EC form application for sure. So you don't have to go through all the rigmarole on the big one. And most people, almost everybody's going to be able to do this. So what they're saying is here on this is that you're going to have to say that either you are a sole proprietor without any employees, and you can just click that box and you qualify for the EC form. Or box number 2, that you didn't reduce compensation for any employee by more than 25%. And that is for the covered period to the first quarter of 2020. And we get to that, what's required to do that later. And in addition to that, you have to certify that you had no reduction in number of employees. And then the way that reads is that you're certifying that there is no reduction between the number of employees at the end of the covered period and the first of the year of 2020, which would be the pay period of spanning 1/1/20. And also that there was no reduction in average paid hours per week on those same comparison periods. So that's the certification that most people are going to do. You can also do box 3, and that is that they're saying that unable to operate at the same level of business as before the crisis. And there's not many explanations for what that really means. My interpretation is that you take your financials, the revenues for the months that's covered within the covered period, and compare to that same months for last year. If it's less, it's less, and then you're going to have to certify that that is because of COVID-19 restrictions. So this is the first thing that you have to do. You have to click one of these boxes and certify that that is the case. So since banks are up and running and everybody's saying you may apply before the end of the covered period, and you do, everything is telling us that that is what you can do, provided you have spent the money, which most people at this point have done. However, what also happened here in the last month or so is that it was established that the covered period is either 8 or 24 weeks. That means that if you apply before the end of the covered period, then you're certifying what's going to happen, and you have to be prepared to do that. So if you're certifying, no, my number of employees have not gone down since what I had at the beginning of the year, and you look at your payroll report now and they say, I previously had 11 employees, I now have 12. So what you are to certify then is that you're not going to go down below 11. That's in reality what happens, just to be aware so that you don't fall in the trap. You are submitting your PPP application and then you lay off 5 people. That could come back and hurt you. And for the certifications, you're going to see what information you're going to have to upload to the banks and which ones you're going to have to keep on file. And here, the thing on file is for 6 years. And that on file is to support the certification that you're saying. So if we go back here and you're certifying that you had no reductions in employees for the end of the covered period to 1/1/20, I didn't have a reduction in average paid hours per week, and I did not have a reduction in compensation by more than 25% for any of them. You are now going to have to keep this documentation for 6 years. Now, it could be unusual that they come back, but they could. You never know what happens in the federal bureaucracy. That could come back. So what it says is 6 years. Here's a more immediate aspect of it, and that is that none of this is going to be fast. The last I read was that at this point in time, SBA has received about 90,000 or so PPP forgiveness application. None of them have been approved yet. And reading into that is that they probably don't think that they have finished the guidance. They don't know what they're doing yet. And there is a total length of period of time that is 5 months. The banks, the lenders, have 60 days to take your application from submittal to give it to SBA. SBA has 90 days to make a decision to approve it. In those span of those 5 months, I'm guessing that there's going to be incomplete information. The banks lose stuff. They don't know what they're looking at, and they're going to come back and ask you for backup. That could happen. So what I'm saying is that payroll backup, keep it. Because if the bank comes back and say, we want to see your number of employees, that it wasn't reduced, you're going to have to be able to send it to them. And it could be that there's no forgiveness if you don't. Now, I also do believe, and probably somebody's going to ask the question, aren't we going to be forgiven automatically if we get less than $150,000 in PPP money? That is the talking point out there. I surely hope that it happens. It hasn't happened yet, and you can't count on it, because I'm also going to say, if you don't get the appropriate reports from your payroll company now, they're going to get crushed when they get everybody to do it, and it may be difficult. And here is a more difficult one. If you change payroll companies in 45 days, the old one, is that going to be how interested in actually running the payroll reports for you? So get your reports now. Don't wait, because that could spell problems for you. So let's talk about support documents. That is for the certifications that you do when you talk about the number of people. So that is the last pay period in the covered period to payroll period on 1/1/20. So basically, you need a list from the payroll company that said these were the number of people that were paid in the payroll for the payroll that was for the 1/1/20. And then you need a list saying that this is my last. And remember, you may need two. You may need for the one you do now, or if you apply before the end of the cover period. Otherwise, and you are going to need the one that is for the end of the covered period. So you need two lists of people, one that shows the number of people 1/1 and one that shows the number of people at the end of the covered period. That's the way you're going to be able to prove that you did not reduce the number of people. And it's the same with the average paid hours, that you get the report from the payroll company that said, okay, this was the average paid hours for this period, this was the average paid hours for this period, and it wasn't reduced. Now, what this also means, why I want you to look at it, is because don't go by memory. Memories aren't good. And I've seen it in two of the occasions that I was talking about. And that is that in a couple of occasions here, they had actually gone down. They were 1 or 2 people short. So what do? Well, I said, don't apply yet. Wait until the end of the covered period or some week down the line, where you then, if you have to, hire another person for a week. Yeah. Is that not what the intention was? That's true. But the intention here is that everybody wants this money to be forgiven. So if you have not satisfied your certifications, you have two choices. You can accept that you certified something that didn't happen, or you can make that certification true by hiring a person for that last week. All you need is for that period, all you need is for the right number of people to show up in the payroll reports. That's what you need to do. So what did the actual portal look like? And this is kind of a summary, and is not the actual portals, because I wasn't smart enough at the time to take screenshots at what I was seeing. And since these were not the companies that I'm actually operationally involved in, I couldn't force the situation either. But this is what it actually was. It started with that they had basically digitized the form, or the EC form. They had digitized it and put it on their portal. And most of this was actually pre-filled, but you need to check it. And one thing that was not in there was the number of employees at the time of forgiveness application. And at this point in time, that is probably about the same as it is for the number of employees that you're reporting in the payroll period. For you who are going to do the application after the covered period, that's now a different type of number. What are you using it for? I don't know. It kind of doesn't make much sense. So this is typically going to be pre-filled in. You may have to fill in how often you pay, if it's weekly, bi-weekly, etc. So that is what the top of the actual application looked like, had been replicated digitally by the lender. And then the same thing basically on the rest of the application, where they are just asking you to put in the numbers. You do the application, you do the calculations, you get the reports from the payroll companies. So here, I'm not sure where these numbers come from, one of the companies I have, where they have line 1, payroll costs for non-owner employees. So you have to tell them what that payroll cost was. And it is the eligible payroll that you have. And that's the way it should be reported from the payroll company, eligible payroll. And then they ask you to upload the document that supports that. Line B is the same information for payroll costs for owner compensation. And there, the max had gone to $20,833. Then you upload the documentation again. Most likely, it's going to be on the same report where the payroll company is just separating out the owner compensation. So you upload the same thing again. And then you get into the non-payroll costs. You have the health insurance and those kind of things. And then you get into the business mortgage, the rent, lease payments, etc. If you need that, many companies now with 24 weeks don't need it. Payroll cost is all they need. And if you are over by some amount, then in all 3 examples I'm talking about, we didn't even go through that. We just stopped at the payroll cost. So as not to have to actually keep all the documentation for the rest of them. Then the portal did calculate the forgiveness amount, and in all cases it came up to the same amount as the loan amount was. So that is how it was structured. And so this is all done in a way that you have to have the numbers to do a raw input to the lender. There's a note here at the end, and someone's probably going to ask, SBA will deduct the EIDL grant amounts from this forgiveness. You don't do it. You take the amounts that come from the payroll company. You don't deduct anything. The SBA, if they're on the ball, will do that. What that also means is that this may or may not hold, but banks in general are now realizing what's happening, and that is that everybody has an EIDL grant, which means that not the whole thing is forgiven, which means that all the lenders are going to have to do loan servicing, while they had counted on that the PPP loans were going to be all forgiven and not serviced. So there is some hope that maybe that EIDL thing, grant deduction, may go away, but that's a hope. And here is kind of an example of a payroll report that outlined the cost. If we go back here, you see here, payroll cost, line A, and line 1, A and B, that's the payroll cost. What we got was that we got the report from the payroll company that took every employee for the covered period, in this case, 4/29 to 9/4. As you can see, this is not the entire covered period. It is for up to the time that the application was done. So here's where all the calculations were done. And as you can see in the 1, 2, 3, 4, 5, 6, 7th column, there is a column called allowable cash compensation. And that is what the payroll company is telling you, that this is the cash compensation that you can put on your application for PPP forgiveness. And then you have the retirement contributions, employer healthcare expenses, and the state and local taxes, and then the total. Now, the lenders I saw had these reported separately, that you had the cash compensation, healthcare, retirement contribution, state and local payroll taxes separately, but it all came from this report. It's something like this here. I wish I could actually show you the whole thing with the numbers, but I can't. I don't want to do that because it would have been better to see it, but you get the gist of it. This is the type of report that you need to get from your payroll company. The payroll company has to tell you what your PPP allowed payroll amount is. So here, get to documents to be submitted to the lender. And these are uploaded. They are all uploaded, and we are all in various stages of computer literacy. But what you need to do is to have all this documentation on the computer or server that you're attached to when you go to the lender's portal. Because what's going to happen, you're going to do a drag and drop. That is what's going to happen. The lender's going to say, okay, you know, told me that you had $208,000 of payroll costs that are eligible for PPP forgiveness. Now, upload a document that supports that. And that's what you're going to have to do. It doesn't help you at that point if you're sitting with that document printed on your desk. That doesn't go anywhere. So you got to figure out how to get it on that computer so you can upload it. You may have to ask somebody in the office who's computer literate to do it and that kind of thing. I know most of us are, but there are some people who aren't that knowledgeable about it. So I'm telling you, when you do this, get prepared. Get your files stacked, know where you have them on your computer so you can do this. So what documents do you need? You need a payroll report that we just looked at that covers the covered period, that tells you how much your eligible payroll expenses are that you can get forgiven for. They're going to ask for your tax forms, the 941 quarterlies. And in one of the cases I'm talking about, obviously the quarter ending 9/30 isn't done yet, so we can only do one. and hoping that the bank is going to be okay with that. Wouldn't be surprised if the lender comes back and say, I need a next one too, which means you're going to have to then wait till after 9:30 to get it. Now, a lot of small companies are using PEOs or in old terminology, payroll leasing companies. In that case, that PEO or payroll leasing company is going to have to go back to their legal department and break out their quarterly 941 payroll tax filing for you. And that should be accepted, and I think I've read that it will be accepted by SBA and the lenders. But that's what you're going to need. If your payroll company, PO, said, well, I don't have it, you're going to say, you got to break it out for me, because they're going to ask you to upload this documentation. Same thing with the state wage report and unemployment tax filing. They're going to want to ask to get that information. And that should be from the payroll company. Then health and retirement, all the rest is kind of the same thing. It's the bills plus payment proof, and there it should, payment proof should be able to be where you take a screenshot or just have the bank statements where this came out. And that means that you're probably going to have the bank statements from each one of the months where you can show where this money came out. Because what they're saying is that for this non-payroll cost to actually be forgiven, you not only does it have to be actual expenses and due, you also have to pay them. So you have to prove both. Mortgage, so that you can get a lender account statement, and if you can't get that, occasionally happens, then it's the same thing. Then you have to get an amortization schedule for your mortgage and the payment proof of the bank withdrawal. For leases, if you are claiming rent payments, what they want is the lease that shows that it was in effect before 2/15/2020. And if you have renewed after that, it says that this is a renewal of a previous lease. They're asking that you actually upload this. This is why people who have enough payroll costs to get the PPP forgiveness don't do this. Because this now, when you get into non-payroll costs, it's a lot more documentation, a lot more work to get it done, as you can see. Hold on, what's going on there? And there's a question. When should we do this? Should we apply now, or should we apply later? Now, the typical arguments for now is, I need to get this loan off my books because I'm going for another loan. I'm refinancing my building, and this is messing me up. And the other arguments are, I want to get it over and done with. I don't want to mess with it anymore. I don't want to think about it. Just get it done. And also, you get protected from new rules. Later, argument for doing it later. And that is, the IRS has not budged yet. The PPP loan forgiveness in itself is not taxable. But at this point in time, IRS is saying the underlying expenses are also not tax deductible. So if you paid out $80,000 in payroll costs that is being forgiven, yes, you don't get to tax yourself for the PPP forgiveness money, forgiven money, but you also don't get to deduct that $80,000 in payroll expenses. That is absolutely crazy. It does not comport with the theory of why you're paying taxes, which is based that you have more revenues than expenses, and the state and federal government is going to take part of that excess cash that you have. Well, that's not the case here. The whole premise of the loan was that you got the loan to pay payroll expenses and other necessary expenses. So now they're forgiven. So you spent the money. Where are you going to get the money from actually paying the taxes? That's a real concern. So if you do it later, there is a timing issue with that. So now you're getting the PPP forgiveness. You're having the expenses that are underlying the PPP forgiveness this year. So they're tax deductible as you stand. Then if you get the PPP forgiveness next year, then that issue of those underlying expenses are now in a different year than the actual PPP forgiveness. Now, my CPAs are saying that's good and well. Once you get to next year, now when that happens, you're going to have to go back and amend. Okay, I get that. But then also, I get another year to figure out how can I deal with this. And there is another year where these rules may actually change. And the other thing is, right now, I think personally that anybody who's submitting now is a guinea pig. And actually, in some cases, lenders have said so. There are some banks that have gone out to their borrowers and say, we are trying to figure out how we're going to do this, and we want to go to SBA along with another whole group of banks to get something done. Would you want to be the guinea pig for doing it now so we can see how difficult it is? That's good and fine, and want to help. Yes, we want the banks to actually be able to do this, but I don't know that I would want to be the guinea pig. Going back and touch on sole proprietors, different ballgame altogether. Sole proprietors without payroll. You click that first box we talked about. Tells them that you're sole proprietor. You're automatically in the easy form, and then the cash compensation on line 1A we talked about before will be the same thing as your loan by definition. That's how that works. So let's talk, before we do questions here, about some things that I've seen and heard. And that is that the owner was not including his or her own compensation in the payroll amount for forgiveness. And in some cases, the owner didn't actually pay themselves under this for this period of time, mostly because they did not want to spend the money on themselves, as many owners have not done in this period of time. So they don't have their own payroll expense. So in that case, what I would say, unless you don't need the money, etc., you could pay yourself up to the 15% of, yes, I think it's 15, 19% something of your 2019 compensation as owner, or a maximum of $20,833 for the covered period. And then you can turn around and put that money back in as equity or loan into the company to preserve the cash. That way you have added another $21,000 for forgiveness if you need it. That is, again, if you need it. And some people who have started back up late and those kind of things may need it. So I would say, yeah, go ahead and pay yourself, create the $20,000 for forgiveness and put it back in a company. And another one is that some owners counted on the whole compensation for the 24 weeks, which is not so. It's capped at 20,000 or that 19% of last year's. And then didn't create enough other expenses to actually get to the amount. So make sure that you do. That is why you want to kind of keep track of where you are as you go. Not counting employees correctly. And some cases I've seen that they're looking at the wrong period of time. They're looking at employees at the loan application time versus at the end of the covered period. That's not what it is. It's 1-1. Make sure, and also just plain the counting, some counting from memory, counting wrong. So again, we covered it before. If you need another employee for the last week, then consider going ahead and hire it to give the forgiveness so that you don't have to go to the big bad complete application. That's a whole ball game in addition to that. And some didn't count average paid hours at all, didn't consider it. And one of the big ones is not tracking and knowing where you are. You do want to do that. Biggest one, not having the payroll reports. Before you do this application, you have to have the payroll reports that we talked about. All right, Claire, should we do questions?
Had to unmute myself, sorry. Yes, we have quite a few questions, so let's let me turn my video back on and let's jump into the questions. So first one is there a set deadline to apply for forgiveness?
Yes, there is. The absolute deadline is 10 months after the end of the covered period. So if the end of the covered period is 10/15, then count, you got to do it within 10 months of 10/15.
Okay. Then how do I determine which form to use, 3508 or 3508 EZ?
Good question. That's what we just went through. That certification, I think I'm still sharing my screen, right?
Mm-hmm.
So let's go back. What I've seen, this is the beginning. This is what actually certifies that you can use the easy form. If you can click one of these 3 boxes, you qualify for the easy form. That's how it works. And what that means is this is what we talked about before. This is actually kind of what it means. First box, I'm a sole proprietor with no employees. Easy form, go for it. Box 2, I didn't reduce anybody's compensation by more than 25%. I had no reduction of number of employees between these 2 dates, end of covered period and 1/1/20. And I didn't reduce the average paid hours per week in that last week of covered period compared to 1/1. And the last one, if I had less revenues due to COVID, then I qualify. So if you can click one of those 3 boxes, you're in on the easy form. That's how it works.
Okay, then we have, what if an employee left voluntarily?
Yes, there is a provision for that. Voluntarily, and let's see here, I can click it back here. And in the additional here, after the end of things, where it says ignore reductions that arose from an inability to rehire individuals who were employed on February 15, 2020, if the board was unable to hire similar qualified people. So if you're lower because somebody left and then you couldn't actually hire somebody, then that reduction in number of employees doesn't count. So if you were at 15, you're now at 14. Mary Jo left voluntarily. and you couldn't replace her, then you're okay here. You have to certify it. And what they would want to see if they come back and ask you is the documentation that you made the attempt to replace Mary Jo and you couldn't do it. And that could mean that, yeah, I went out, I put ads out, I talked to people, and nobody bid. So you have to have documentation backup if they ask you. What happens here is that you certify the number 2 box, then you're certified that if you had that reduction, then I couldn't rehire, so I'm still good. That's how that works.
Okay, then we have, does the payroll cost include a retirement plan, like a simple IRA?
Yes, it does. There are 2 answers to the question. One is for employees and one is for owner employees. For owner employees, the $20,833 max includes retirement contributions and healthcare. That was in one of the late coming changes in guidance from SBA. For non-owner employees, then that is in addition to the cash compensation, and yes, it is forgivable for those. And your payroll company should give you a payroll report for PPP payroll report that outlines those buckets. So you can put it in to the portal of the bank. They're going to ask for it separately.
Okay. And then we have, what documents are needed if you are applying as an independent contractor / sole proprietor and there are no documents regarding payroll or employees because you have none?
And in that case, you don't need it. You're certifying that you use the money as your own payroll replacement. And that is kind of the end of it.
Okay.
And you may, what I would do would be, remember, it has to be paid out. All of this stuff has to be paid out. So if you don't have separate bank accounts, then I would just say, okay, it's here for me available to actually use. If you have separate bank accounts between the business and there, I would pay myself out of the business account and put into my personal account.
And then this, I think this is kind of the same question. So how do you show that? I think it answers the same thing. How do you show that you paid yourself the money? The money is used to supplement your own income. It's the same. I think you just answered the same.
We just talked about that. Yeah.
Can you clarify the application period? The 8 to 24 weeks starts when? After the distribution of the PPP loan?
That is correct. The way that it's being expressed, the day of funding, the day you got the money, the day the bank dumped it into your bank account, that's the day it starts.
Okay. So here's a question. One of our company's major owners serves as a W-2 employee and runs the company. In our original application, this person's wages were included for total monthly payroll cost. This person was also used as full-time employee and counted in full-time employee calculation. In filling out the forgiveness application, there is no place to include the owner / employee in the 2020 FTE count for the covered period. The owner compensation is limited to $20,833 and is recorded separately from all other employees. The question is, in the application, should the owner be counted in the table in table 1 for FTE count and have the compensation counted on line 9 under compensation of owners?
It should not be in table 1. It should be under the owner employee or owner table. It should be the typical ones that I've seen. with the bank has a separate input for owner compensation. And yes, early applicants of PPP loans got the loans and got it based also on the owner compensation, and subsequently that compensation got capped. Forgiveness compensation got capped to $20,833. Yes, you're stuck with that. What you got to do is find other expenses to make up for it. And yes, I know the 60% limitation there. That's why you want to know well in advance where you are and what you can do and all those kind of things. I have seen people be fairly creative on these kinds of issues. And by that, I mean literally very creative on how they do it. And legally. One I know hired their son for a period of time and then took that money that's now in addition for PPP forgiveness amount, and it's still contributed to the family income.
Okay. In your opinion, would there be any downside to a sole proprietor applying for forgiveness now, especially as most sole proprietor PPP were maxed at 2833?
No, I don't see a downside to sole proprietors doing the application now. And part of that is also that as sole proprietor, we don't have, the sole proprietor doesn't have the issue, IRS issue of underlying expenses not being tax deductible, because this is an owner compensation. It doesn't apply. So you don't have the issue. So yeah, as a sole proprietor, I would probably just do it and get it over and done with.
Okay. Is a partnership treated the same as a sole proprietor?
Partnership without employees, yes.
Okay. How do you define the covered period?
The covered period is 8 weeks or 24 weeks from the day of funding.
Okay.
And then when you look at the payroll aspects of that covered period, you could use the alternative covered period for only the payroll aspect of it, which would be the start of the next payroll period. For most people, it doesn't affect anything. For the people, some people who are in childcare, restaurant, those kind of things that were late opening up, could use this as a way of extending that period of time while you are open by 1 or 2 weeks or however long the payroll period is.
Okay. I have a PPP loan approved in mid-May, and from thereafter 24 weeks, it brings me to November. I have until September 2021 to apply for forgiveness. If that's the case, then would you recommend waiting until 2021 for the IRS to figure things out?
Yes, I would, unless you need to get the loan off the books. That is what I would do. No set in stone, different people have different answers. Personally, that's my approach.
Okay. I got my PPP before my EIDL. Can I incorporate them together?
2 different things. No.
Okay. Okay. What do you do if you reported 11 employees, but all are part-time except 1? Using the employee calculator, I have 8.5 full-time employees.
I would read the questions literally that they're asking for. To get to the EC form, they are asking for the number of employees at those period of times. They're asking for if you reduced it by more than 25%, and they're asking if the average paid hours went down. The 8.5 FTE, some payroll companies are using that as an approximation of the last question there, and which the average number of hours. And that may probably be the case. You can use it for that, but there are little questions that I just mentioned that you have to answer in the certification.
Okay. Can the amount listed for the covered period payroll be larger than the entire PPP loan amount?
Absolutely, yes. Yes. And it could also be one of those things, why does it matter type things? Well, most things are practical in life, are practical issues. And so here, kind of think through that, okay, so if I now stop, exact my payroll cost, exact my PPP forgiveness number, exactly where my loan was. And here comes an issue with no, you used too high of a compensation for Bert because Bert is actually an owner. So now you're under. Well, I could have used more. Well, buddy, that may be too late. A lot of this is bank related, what they're going to do. There are the SBA guidance that in some cases are fuzzy. What happens is that each lender are looking at this and saying, I'm applying what I think it is. And the three banks that I've seen are looking at the world differently. So it's whatever the bank says that it is. So if they come back and say, no, we disallowed $15,000 for you, you're going to hit yourself over the head if you had another $15,000 that you actually could have reported. So yes, go ahead and report it, and you want your payroll company to give you the total amount, even if that's double. The bigger, the better, I would say.
Okay. And then what is the number of hours considered FTE?
40.
Okay. And does anybody else have any questions? Because that's it. That was the final question we have. So just the last, oh, there we go. As a self-employed, should I wait until the bank gives some kind of guidelines for the forgiveness?
If as self-employed, you mean that you're a sole proprietor without employees, no, then I would not. If I'm self-employed as an owner-employee, I have employees, and it's fairly complicated and those kind of things, there are some fussy things, then I would wait.
Okay. Any other, if there's any other questions out there, if you put them in now, because that was the last one and we're coming up to close towards the end of the session. So I'll just talk for a minute, just in case any other questions come through, but just remember, SCORE is a free business mentoring program for small businesses. Chris and I are with the Monmouth County chapter. We have a number of mentors. If you check our website at monmouth.score.org, if you're looking for mentoring, please reach out there. Any questions, you can always email monmouthscore. What is the email address? monmouthscore@gmail.com, right, Chris?
I believe that it is.
Yeah, yeah. monmouthscore@gmail.com if you have any questions. And failing that, I will also say that we have a number of webinars coming up through the month of October. So if you check out our website at monmouth.score.org, you can see them there, or our Facebook page. And this recording will be up on our YouTube page within a couple of days. And I think that's all I have. If anybody else has anything, speak now. If not, I'm going to say thanks very much. Appreciate you, Chris, and everything that you do.
There is one question that somebody had
there we go.
in the chat that I want to address.
Yep.
And the last one there, do you have to pay unforgiven loan amount? Yes, you do. That's the whole thing about forgiven. The forgiven part, you don't have to pay back. The unforgiven part, you have to pay back. And depending on when you got it and what the bank says, it's either 2 or 5 years. Most likely 2 years with 1% interest.
And then one other quick question before
And also, when I remember it, that starts before the 10 months have passed. I think it's 6 months that it is for before we have to start paying. So it's been so long, but it's before the 10-month period ends.
Okay. And then just one final question as well, which is if an employee leaves and you don't replace that person, but you hire someone for a different position, so you still have the same number of FTEs, is that okay?
Absolutely. If you have the same number of employees, you don't have to worry about leaving or coming, going or coming. It's the number, plain and simple.
Great. Chris, thank you so much.
My pleasure.
I'm thinking we'll probably have another one of these within the next few weeks when things change or there's any more updates. Does that sound right?
Yeah, see if there are updates coming and we start seeing that the more banks are coming on board, they're starting putting this stuff out there and we start seeing what it looks like if it's different. So yes. Yeah.
Great.
And the big thing, apply.
Yeah.
You don't get forgiven unless you apply.
And that's kind of pending your bank, right? So you can't apply until you
As pending the bank, and the big risk here is for the banks that are going to be late in the game because it slips people's minds.
Yep.
So you're going to have to look out. You put it on your calendar, make sure that you look for it.
Great. Thank you so much, Chris.
Thanks,
everybody else, thanks for joining, and we'll see you all soon. Thanks.
All right.
Bye-bye.
Thanks.